Welcome to Wyckoff Power Charting. My name is Bruce Fraser, and I'm your host. This is episode number 10. We recorded this episode on October 2nd of 2018 to be aired on October 5th of 2018 and thereafter. And I am with my co-host, Professor Roman Bogomazov. Roman, welcome.
Thank you, Bruce. Good to be here.
So we have I think, a great 30 minutes that we're going to spend together talking about Wyckoff, the Wyckoff methodology, point and figure charting. So Roman, let's get started. First of all, we have an October special coming up, and this is going to be a 3-session series webinar, and it will be recorded. And it's projecting point and figure price targets across multiple time frames. And we are going to show you how we use point and figure charting in all of its different variations for campaign counts, campaign trading, swing trading, intraday trading. And we are going to become very practical about the use of point and figure charting and take all of the mystery out of it. Roman, what do you think?
Yeah, I really like the idea that we're going to show our students exactly how we start looking for our count line, how we're looking through the phases, how we're calculating all of the objectives, how we're projecting those. So you will be able to see a blank chart and then all of our drawings and all of our counts. And I think it's very valuable, Bruce.
I think point and figure charting is one of the most unique and valuable charting methodologies that there is. It's ancient, it's been around forever. It's difficult to learn. It's somewhat of a mystery to many people. And our job here is to take the mystery out of it. I like to say it's a little like riding a bicycle. Once you learn how to do it, you never forget, and it becomes just an exceptionally valuable tool.
Bruce, yeah. Well, let me ask you a quick question.
Sure.
So you said that, you know, it's a difficult tool to learn how to use. So what, in your opinion, and I mean, obviously you've done so much work on this, in your opinion, what's that difficulty that usually students encounter with the PMF?
I think it comes down to one thing, and that's construction. And the columns in a point and figure chart are the changing of a column from a down column to an up column and then back to a down column is different from a vertical chart. On a vertical chart, each period, whether it be intraday, daily, weekly, each period is a function of time. It's a constant. In point and figure charting, you only change columns as a function of volatility. And so as you go from down volatility to up volatility by a predefined amount, you change columns. And so this is a somewhat of a mystery how this is done. Once you've had some exposure to it and you've learned it, you realize that this is the secret sauce that helps us to understand how to take horizontal point and figure counts. This is the magic of how to get really good, valuable point and figure count objectives using the horizontal methodology. And at first it's mysterious, but as time goes on, it just becomes a central part of every Wyckoffian's toolbox.
All right.
And Roman, we have a Wyckoff market discussion coming up. Tell us about that.
Well, usually every week on Wednesdays, we get together with Bruce and our students, and we have such a great group where students even submit their charts, you know, label charts, and Bruce and I, we go through those and have our opinion on the labeling and, you know, the bias. But we also go through a lot of the market charts on Wednesdays. So we start with the market, all 4 of them, and then we go into specific case studies. Like last time it was on oil, and energy sector, and then we go into the industry groups and stocks. So we go through quite a lot of charts through the whole session. And it's always the last bar analysis. And that's why I personally like that class, is because we are accountable on that last bar, how we see the pictures. So to me, Bruce, that's always fun to go through the current market charts through so many industry groups and stocks, and just, to see what our students, Wyckoff students, are bringing us.
Wonderful. Well, Ramon, let's get to work.
Let's do it.
Now, the scan that we focused on for today is one called the low pole reversal. And the low pole reversal is a down column. So down columns are O's. You can always tell in a point and figure chart when you have a series of O's that is the price declining. And so you get a low pole reversal when after a decline, you have a reversal that turns back up by at least 50%. So if you have six entries down and you reverse by 3, then you have a reversal of the low pole decline. And so we're going to be looking at that as a scan today, and look at it, some stocks that have accomplished this phenomenon, and then see how we might be able to use that scan to look for candidates. Ramon, any last thoughts on this?
Yeah, I think it's very important for us to understand the context. The context of what we're seeing in this low pole scan. Because even here, we see that the predominant trend is to the downside. We are seeing lower highs, lower lows. So this rise up, it's always a question, is this a bullish reaction to the low pole, or is this more of a bearish reaction to this low pole, and we're going to have a continuation? So as we go through the charts today, Bruce and I, we will be talking about the context, and specifically the context of the Wyckoff structure. We're going to talk about this a lot.
And so when we talk about context, actually when we select stocks for analysis on power charting, we're looking at the broad lists of stocks. We might sort them by large caps, medium caps, and so on. But we're looking at those, and we're making context decisions when we determine when to put a stock into our master list of candidates that we're going to talk about or potentially talk about. So here we go. So let's look at some of those. So here you can see, here's the scan, PMF Patterns, and we're focusing on PMF Patterns here. We won't always do that because we want to get into some of the other scan concepts also. And part of why we want to get into scans is we also want to talk about some of the issues or difficulties that we have with scans, which Ramon has just alluded to. So here we have PMF low pole. There's 287 stocks that make up that list right now. The New York and the NASDAQ have 86 and 61 candidates that are in that space. And so you can see that that's a lot of stocks that have had important declines and then reverse those declines. And so we will look at a few examples of that. You can see in the scan results that we selected 2 here, and then we have a third one, which is Cellgen. So we're going to look at ServiceNow, Philip Morris, and Cellgen, which comes off of the NASDAQ list. So you can't see that here, but that's where we found that candidate to look at. So Ramon, any other thoughts here?
No, let's just get to work here.
ServiceNow is a really interesting case because after a really good advance in 2017, it actually went up into the January-February peak, had some volatility that was associated with the decline in the broad market. and then continued to rise to new highs into early March. So you can see that there's a buying climax, automatic reaction, and then we have a structure of an uptrend that occurs on a rising scale. Notice the difference in the way that the rise took place in ServiceNow from the early March peak and the automatic reaction compared to how the rally was advancing in 2017. So you can see there's a real change of character there. And so the only other thing I want to point out, and I know that Ramon has some important points to make about this chart, is notice on this resistance line that's a rising resistance line that there's a throw over that occurs in September. So you can see that there's a series of peaks and then a very subtle throw over that occurs on diminishing volume, and then a decline, and that decline comes on expanding volume, which is evidence of supply off the peak, which is potentially a warning. And you can see the prior advance, Ramon's already a step ahead of me. Look at the volume that comes in off of the peak, off of that resistance line as it goes down to the bottom of the trend channel again. And so you can see that there's a signature of supply that's starting to show up in the stock. Ramon, your thoughts?
Yeah, this is a very interesting chart. I mean, you could definitely see a lot of bullish patterns here, starting from the beginning of consolidation, where a change of character is actually not that big. The distance that we have traveling to the downside could be comparable to the previous reactions, and it doesn't produce a lot of selling. So that suggests initial bias for us as a reaccumulation bias. And then we have three reactions that are of interest to us. Bruce has mentioned two of those. But all these three reactions have some kind of volume signature off the top. So that suggests the emergence of the supply at all three of them. But yet, what is the result? The downward result is actually diminishing, and it's happening on the uprising scale for the lows. We have always consistent higher lows. So these are all bullish indications. Another bullish, more short-term indication could be the way how supply has increased on the last reaction, and then look at the most recent kind of like a flat reaction, which has a diminishing supply. Having said this, we definitely could think that this could be an upthrust, and usually with this type of patterns that are kind of like prolonged higher highs, higher lows, we could, even in the bullish structure, have some kind of shakeout first and then coming back into the range. And that would shake out a lot of the weak hands that are getting in this pattern just because they see a bullish pattern. And if the CO is not active, the composite man is not active at this point, the price could just kind of drift lower, and then the weak hands could get out at this point, producing some kind of shakeout or a sprint. So Bruce, I think that, short term, both scenarios are possible here.
Well, I really like the way that we have, say, since June, each of these lows has attempted to come back and cannot get to the oversold line. And so there's actually aggressiveness in bidding the stock by institutions above the oversold line. And then you have a change of character that's occurring here in late September, the beginning of October, where it attempts to come back, or it basically goes sideways and cannot return. It shows no inclination to return back to the oversold area. And so the other thing about it is that if we look at the point and figure chart, we can see that there's an initial accumulation area. And this accumulation area, and these are the things we'll talk about in our workshop, is you can see across here that there's 9 columns that we can count. Now, this is a trading count. So we have trading counts, we have campaign counts, we have intraday counts. And so we're looking at different contexts for what we're trading for. And so here we can see that this accumulation area, after a change of character from an uptrend into a reaccumulation, has produced a count that takes us up to 212. So we've gotten up to 204, which is very close. We're 2 boxes, because there's each box is 4 points. We've gotten within 2 boxes of achieving that count. And so we're pretty close now. And we could have a throwover that goes up to that. And then we would have to look at the way the trading is occurring to see whether or not this is exhaustion of the uptrend and it needs more time to build a further count. Ramon?
All right, I think that we're done with this one, Bruce.
So let's move on. Philip Morris is interesting. We are looking at the structure of Philip Morris, and again, it's a tobacco stock. Some people don't like to trade them. We're here to talk about Wyckoff, and we certainly understand people's their biases about what stocks they want to trade or buy or sell. So anyway, we're just looking at the structures here. And so with Philip Morris, what do we have, Ramon?
Well, a lot of the distribution and capitulation on the way down by institutions, but at the same time, the composite man comes in and on this liquidity picks up those shares. And that's what produces the initial stop in action on this big bar, an attempt to stop at least, and then a much weaker movement to the downside after that. And I would say that we have attempts, different attempts to go down. So here is one zone or segment where there is a stop in action, continuation, and absorption of the supply, which is still relatively high to anything else that we've seen before. Then the second attempt to shake out the bias in potential phase B, a shakeout type of action. But the price is showing some strength on the rally. So this upthrust action in phase B shows that type of strength. And then kind of like an orderly decline into the potential last segment, phase C, where supply is diminishing relative to phase A and phase B, to the previous declines. And now we have somewhat a sustainable rally where the demand is consistent. Bruce?
I really like the way this stock is trading since June. So we have an important June low, and that low is the potentially the shakeout in phase B. And then after that, you have a really good change of character where you have a really steady rally up into the late July peak. Now, this is a sign of strength of sorts. And so this is important because we look for after an initial sign of strength, we look for weakness back into the area of accumulation and down to the support line. And so we can see down there, and we call that phase C, we can see a move down to the initial support area where it stops. We can see that there's a lack of conviction in selling because the volume is generally drying up. The volatility is really low. We can see very tight ranges in there. And that is the third. So we have the June low, we have the July low, and now we have a early September low. Each one of those is higher than the prior. And so this is encouraging. And so we would call that a last point of support in phase C, because it doesn't go down to a new low. Higher low with the test, last point of support, and now we have a nice steady rally up and out of the overhead resistance area. And it appears to have to be attempting to get up to the prior peak that it made in early August. So going down here to the point and figure chart, we can see if we take this whole count. Now we're taking this as a trading count. This is a one box reversal method. So we generally use one box reversal method for trading counts. We have 33 columns across here, one box reversal, and then the scaling you can see on the right side is 1-point scaling. So we're using traditional scaling. This gives us a count, 33 columns times 1, 33 columns and a count line of 81 gives us a count up to 114. So this becomes a trading count. And so our objective in trading is to identify the point at which the instrument that we're trading is ready to move now. And so this is why we always wait for this phase C conclusion and look for the capacity to be able to change character and start to rally good bullish bars, good expansion of volume, and then also the completion of the point and figure chart. And so it appears that we have these characteristics. And so now the only thing we would be concerned about here is whether or not Philip Morris wanted to turn back down again somewhere around these price highs, resistance highs, and put in another last point of support of some kind, or become a bigger count. And so it is sort of up in the resistance areas. It'll be interesting to see what it does here. Ramon?
I actually really like looking at the interim PMF objectives that are coinciding with the interim resistance and support points, because it just confirms that at some point the price will stop there, have some kind of consolidation, supply might come in there. And another point that I want to make, was the PMF construction as we were preparing for this session. Identify where the initial buying by big institutions came, at which bar, at which point, at which price point, and then extend that count up to that point. And the reason why we would do this, because for us, there is always a question of a bias in the formation. Is this an accumulation, or is this a continuation of a downtrend? So whenever we see the evidence of the composite men accumulating, even on the way down, this is where we want to extend our account to. And that's why I think it's a very legitimate count, Bruce.
The other thing about low pole reversals, which are a tricky business, and we were talking before as we were preparing the show, is the issues of context. So you can see that there's low pole reversals throughout this point and figure, and each of these low poles has been fully reversed. And so context, the important thing is that when you complete accumulation, you stop getting low pole reversals, because the ability to show volatility in a decline goes away because absorption is occurring. And so this is an interesting thing that gives you advance warning, but it also shows you all the weak stocks. And so here, what we need to do is we need to use the idea of context, where we're seeing low pole reversals reversed, and then an inability to show volatility in a negative way again after that, which shows us the completion of the accumulation. Ramon?
Yeah, you have to be extremely cautious about how you interpret, actually any scans, that you look at. You need to put the results of those scans into the context of a structure. As you could see here, this is, in the upper part of the chart, this is an area of the redistribution where we had some signs of continued selling, and that has produced a move to the downside. And then we're discussing an accumulation here. So the context is extremely important, to find the signal in the context of accumulation and to find the signal in the context of a distribution is going to be so different. So please pay attention to that.
Okay, we have one more. So here's Cellgen. And so Cellgen is we're looking at this as a campaign stock. Very large accumulation structure. You can really see that in the point and figure chart. But looking at the vertical chart, you can see liquidation occurring, and ultimately, you can see there in late February that there's a very large decline, which produces you could actually argue that that's redistribution for another move down. And then it goes down into another decline. Well, this is starting to look climactic. And this climax area is a shakeout of sorts, it appears. And so after that, you can see the volatility really drying up as it consolidates that selling climax area, and then turns up with a really nice change of character. This is a completely different character from anything that precedes it on the chart, and starts to really have the attributes of being under accumulation. Ramon?
Coming back into their regional range right here, and observing that actually some institutions came in at this point, and obviously on some catalyst event have produced some buying, and the same thing here has happened around the same area. So we might assume that there is some kind of value zone for institutions at this point of time, and then as the price goes down, we are getting into the oversold under that value zone for them. Some buying again, and then coming back, and look at where we're resting. We're resting again, in this value zone. But the behavior of trading range number 3 is so much different than the previous two. We could analyze, the behaviors as analogs because they are somewhat similar in the duration, somewhat similar in the height of that trading range, and even two of them are on the same price level. So what would we be looking for? We would be looking at the volume signature, and we see how the volume is actually diminishing relative to the previous two structures. So therefore, we would be assuming that supply has been exhausted at this point, and we could find the evidence of that also in the price behavior. A change of character is very limited. The biggest reaction commits to the downside below the support just once, then consolidates and comes back. So there is no supply that pushes price further down. So that's a bullish indication. And from here, we're expecting that there's going to be a continuation, and therefore we just want to measure this whole thing and just to figure out what kind of campaign count is possible here. Bruce, what do we see on the PMF?
Well, we have a really big count. We're doing one box scaling, one box reversal. And so we're counting across, and we have 57 columns of count that goes back to the late February, beginning of March low, where the volume comes in. And so we always want to take our count back to where we see the institutional buying come in. And so we're able to go across from our most recent turn up, and this takes us 57 columns times a one box reversal method times one box scaling gives us a count. So 57 plus the count line of 88 takes us up to 145. And so we can see that there's a tremendous amount of potential in this accumulation area. Ramon?
Yeah, I like this big count and what it gives me, kind of like a swing trader, an opportunity to think in swing trades. So we might have a swing trade that would go to the previous level of the resistance, have some kind of another consolidation that could potentially produce another move, to the final objective. And obviously we want to count any kind of like intermediate counts there. Bruce?
Ramon, we're done. Thank you so much. And we'll see you all next week.
Sounds great. Thank you, guys. Bye-bye.
So long.